Alright, welcome to this new video. In this video, we're going over the New York session strategy. We're going over two frameworks you can use inside your trading during this New York AM session, and it's focused mainly on the Forex pairs. First, we're going over the framework, and then we're going to dive into the charts to see some examples to further develop your understanding. So without further ado, let's dive in. When trading the New York session, it's very important to know what the London and Asia session did. And the New York reversal looks a lot like the Asia consolidation from the previous video, from the London strategies. First rule is that London did not hit a higher time frame array yet. So this is London trading in the direction of drawn liquidity. So you think, okay, we are ready to go to the downside, but we're leaving highs, low resistance liquidity up here, and a higher time frame array. That can be a fair value gap, it can be an old high or low, it can be an order block. And then during New York, it manipulates higher, taking out the London highs and then displacing lower towards the clear drawn liquidity. This looks like the Asia consolidation profile, because in the Asia consolidation profile, you had a Asia consolidation, then a London manipulation higher into the higher time frame array, and then lower towards the drawn liquidity. So it's the same structure, but then a different time. And the second part of the framework is not the New York reversal, but the New York retracement. This looks a lot like the Asia expansion. London already hit the higher time frame array, so the old high or the old imbalance, and then moves away, leaving fair value gaps. New York manipulates, coming back into the fair value gaps before moving to the draw on liquidity. So New York will only give a retracement back into the range London created. And in the first part of the framework, the New York session will create a high or low, taking out the London session liquidity. And now, let's go into the charts and see some examples how this works out in real time. Let's take a look at this first example on AU at the 5-minute chart. Up here on Wednesday, we took a significant old high, and then we displaced lower and lower. And now we have created a 4-hour SIBI right here. Here is the start of Thursday. You see some movement lower, and then London, a little bit consolidating here, low volume, not much energy. And the end of London, you see price trading towards our drawn liquidity, and the drawn liquidity is down here, these lows. But now you should ask yourself, the drawn liquidity is lower. We have a 4-hour fair value gap still waiting to be rebalanced. And we have failure swings right here. At the start of New York, you should anticipate, hey, perhaps we can get a New York reversal profile. That New York will take out the London highs inside a higher time frame array. Remember, London, New York, reversal. That's the setup we're looking for. Just like on the London session, there's your Asia consolidation, London manipulation, and then distribution. And let's see what New York does. Here you see that massive movement was during 8:30, was during a news. I think this was CPI. So around CPI, you shouldn't expect too much, but I think this is a very nice example for how it can be in real time. That is not the clearest example, but I think it's very nice to show you guys from, it was time for recording, it was last week. And then what is happening here on the 5 minutes? So we tapped that 4-hour fair value gap, we're respecting the 50% fair value gap, and drawn liquidity is lower. So now I'm expecting a New York reversal and looking for short setups. And I want to short inside a fair value gap. Is there a bearish fair value gap right here? No. The raise I'm looking at is the up close candle that took out the highs here. So when price trades lower, then this up close candle, this green one, becomes an order block. I'm anticipating that. Not yet. Price needs to first trade through that. So now we are around the open, New York open. And then you see that energy away. So now this up close candle has become an order block, and you want to see the order block being respected and at least the 50% of that. And here, inside that order block, we have our first fair value gap. Here, you can already take an entry. Where should your stop be? Your stop can be at this top fair value gap or above the highs. I like to do it around here and then target a 1 to 2 or 1 to 3. And eventually, so you see the bodies now are respecting the order block. That's very nice. If there's another fair value gap, you can even take a second entry. What are these up close candles? Those up close candles? This is a bearish order block again, because the up close candles traded to a fair value gap, making this another order block with a fair value gap. So potentially, you could take second entry right here. Same story, little less RR, And in the second one, we don't get tagged. Here's a third scenario. You go short right here. Oh, we do get tagged actually. Then eventually we go lower. And here's the end of session. So you see that we have a little retracement here. And let's fast forward towards the next day. Because during the next day, during London, you will hit your take profit. There you go. It was on Friday. New York comes back during the Asia session. No stop has been taken because your stops are all up there. So you had 1, 2, 3 entries you have from your New York reversal profile all the way up here. Now let's look at this example on GU on the 50-minute chart. What do you see? First of all, we have a daily low right here, the Wednesday low. We are currently at Thursday. And we have a swing high right here, swing high right there. And lots of imbalances. When you're at London, you're seeing this price action. You shouldn't trade London. This is a London consolidation. And where I want you to train your eyes on is, okay, we made the low here at 4:30. We took out the AM lows, but we didn't take out the London lows from the last day, or the previous day. But this is not a significant liquidity pool because most sell stops are below here, a daily liquidity pool. But price already displays upwards, leaving a value gap, the upside. And that's the question, do you trust that? And I have a rule of thumb, I want at least a daily liquidity pool being tagged before I trust this type of London lows, because this is basically consolidation. Well, your idea is here to be more invalidated, because hey, expansion upwards, probably will already go to this swing high, it's low-hanging fruit. And this is a nice example for when you will be faked out, because what happens after, look at the price action here. And now we are at New York. So what do you see here? This was a London consolidation. When you have a London consolidation, then a New York reversal profile is on the cards. Because what happened here? It displays upwards, but then it stopped here, leaving all these failure swings. Very nice liquidity, right? And then during the New York session, here, 7 a.m. start of London, we took the low, and then look at the energy upwards. And here is where I want to get in. This is around 9, and let's see what we have here. So this fair value gap is not valid anymore. An inversion fair value gap here, overlapping with a normal fair value gap. What is that? A balanced price range. So my point of interest is the balanced price range right here, and I would like to take a trade from there. My stop will be below this down close candle, because in an uptrend, you want down close candles to support price. I think already these down close candles is, of course, a massive order block. Will do the job. I don't want to get wigged out. So under this down close candle, I want to do my stop, aiming for 1 to 2. This is low-hanging fruit, but there's lots of energy to be rebalanced here. Lots of liquidity to be but there's lots of liquidity to be rebalanced right here. So I'm aiming for 1 to 2. And let's see what price does there. Going to drawdown. And now you see that the bodies are respecting the balanced price range. Expand those up, and now we're approaching the open. And very interesting. So we displace upwards from the balanced price range. Then we displace up again, leaving another value gap. See how the bodies are touching it together with the order block here. Then displaced upwards again for value gap. And here it stopped. Why it stopped there? Market close. And then during next day open, it went to TP. Seeing this and training your eyes, you can move your stop to the mean threshold or to the low of the value gap here. Because you already are in a balanced price range. Price actually shouldn't go below the balanced price range. So here you can refine your entries. I like shoot for 1 to 2, but you can refine your entries by just testing yourself for value gap, balanced price range, put your stop under the for value gap, and you should be fine. And then you have a 1 to 4, or even you can do it like this, to the low-hanging fruit, this swing high, or a 1 to 8. Now after seeing 2 New York reversals, let's switch to a New York retracement. So New York retracement looks exactly the same as a Asia expansion. So London already hit the higher time frame array. This is old low right here. And then the price displacing upwards, leaving a fair value gap. In an uptrend, you want down close candles and fair value gaps to support price. Fair value gap 1, and down close candles is supported. And it goes up again, like a little bit, and then starting off New York at 7, right here. This is your first retracement. right here, balanced price range. 1 displays up again. Around 8, we come back all the way again, tapping into this fair value gap, and then the 30 shoots up. Then again, another retracement into this order block and fair value gap before moving higher. If you want to have traded this, you come into New York. So you wake up at 7 a.m., for example. You've only seen this so far. Then the first thing is, where's drawn liquidity? Well, look at all the failure swings right here. So I would say this is low-hanging fruit. You can also target these highs. This is a very significant swing high that is a failure swing. I would say right here, that's drawn liquidity, 7 a.m. There are multiple value gaps here, 1, 2, 3. I would already take it here. Let my stop loss be able to hit the last fair value gap, and then here for 1 to 2. In hindsight, we know it's going to this fair value gap, but you don't know there. So I like to do the first fair value gap. If you want to be certain, you can do premium and discount. So go wait for price to come back into discount. Thing is, sometimes it doesn't come into discount, especially when it's very bullish. I like to cut some of my risk to reward to be in the trade. So I do the first fair value gap, a little drawdown there before it goes to your take profit. Then if you overslept, then you can have another entry, another displacement with 1, 2, 3 fair value gaps. You can take it here in the first one. Then your entry will look like this, stops below this low, because this one is an intermediate low right now. You do it a little lower if you want to be safe. And then you have around a 1, 2, 4, 5. And below this low, you have a 1, 2, 1, 8. So still all good trades. Here in this final example, we're going to combine both the previous video about the London setup with the new learned New York framework. And here we have aggressive sells out of the range during Asia, aggressive buys into the range during Asia, leaving fair value gaps. Here's fair value gap 1, here's fair value gap 2. We are going to wake up, because we're only trading New York, we're going to wake up at 7. So let's see what happens between now and 7. Here's where you wake up. And this is the first thing you see. We have drawn liquidity here and also some failure swings, but low-hanging fruit is this fair value gap right here. We already see that we have a Asia expansion. That means London retraced into the Asia expansion. We're going up again. That means I don't expect a New York reversal, because a New York reversal would mean we go all the way down here before going upwards. Because Asia already hit the higher time frame array, that isn't necessary. So this low for me is protected. So my stop loss will be below this low. Then it's the question here at 7 a.m. We want to go higher, but where are we going to go higher from? Well, these down close candles is the order block. So any of the overlapping fair value gap. So my entry will be this fair value gap right here. Order block, fair value gap. So my setup will be like this. Stop loss below low. Target the value gap right here for a 1 to 2, 4. And let's see what price does. As you see, price didn't tag me in. And I want to give you this example because realistically, you're not going to be in every trade. So the game here was, we swept this low by 1 point before going up. So this trade you would have missed. But the game remains the same. It's about which profile, which frame do you expect. You've seen an Asia expansion. You see in London, the retracement into the Asia range before going higher. You see in New York, retracement before going higher again. And you missed this today, but what you learned is this framework. And look closely, you also see a market maker buy model. Market maker reversal inside Asia. Thank you for watching this video. In this video, we went over the different New York strategies you can use. We went over the New York reversal, we went over the New York retracement, and where you can combine both London and New York session to frame your trades around. If you like this kind of videos, please like and subscribe, share it with all your trading friends, and I'll see you in the next one.